Welcome to Rua Perfect classes. In this video, I will discuss about how to calculate GST in accounting and what is journal entry of of GST in journal entry. Now, first of all, I will discuss about what is the GST. GST means goods and services tax. GST is indirect tax which is imposed on supply of goods and services. What is GST? GST an indirect tax which is imposed on the supply of goods and services, and it is a multi-stage destination oriented tax which is imposed on every value addition, replacing multiple indirect taxes including VAT, excise duty, services taxes, etc. Now, first of all, I am discuss about interstate purchase. For example, we have given a one example. Mr. A purchase goods rupees 1 lakh locally intrastate on 14th March 2024. He sold them for rupees 1,50,000 in same state on the 15th March 2024. When it will purchase on 14th March, how much amount? 1 lakh. When he sold those goods, what will be the price? 1,50,000. When sold that on 15th March, where he sold that in same state, so that's why intra-state purchase. He paid legal constellation fees. He paid also legal constellation fees rupees 5,000 on 18th March 2024. Now he purchased again furniture for his office use 12,000 28th March 2024, and assume that what will be they assume? CGST, Central Goods and Services Tax 2.5%, State Goods and Services Tax that will be 2.5% on the goods traded, whereas the GST on the legal counsel is 9% for CGS and SGS each. Further, GST rate on the furniture that will be equal to 14% for CGST and SGST each. Now entries. First entry for the purchase. That purchase will be happen on 14th March. Entry will be purchases account debit, because when we purchase these goods, that will be price 1 lakh, and input CGST. When we pass entry for purchases of GST, and when we pass GST entry with purchases, then we write here input CGST account debit, input SGST account debit, and that is given 2.5%. 1 lakhs 2.5%, that is equal to 2,500. 1 lakhs 2.5%, that is equal to 2,500, and add all these values and we will get 1,05,000. that will be credited by the to creditors account, because here purchase of goods to be traded bearing GST of 5% in total. On 15th March, according to sellers, debtors account debit. But what will be amount will be transfer here? That will be concluding after these values. Two's sales account. How much price when it sells goods? 1,50,000. And GST, when we write GST with the sale, then we will write with the output. we will write output and two output GST, two output SGST, and amount that is 2.5%, 2.5%. 15 1,50,000 multiplied 2.5%, that is equal to 4 4 3 is the 12, 4 7 28, 4 5 is the 20, that is equal to 3750. And when we add all these values, we will get debtors account debits value 1,57,500. Debtors means customers to whom seller sells the goods. And these two entries passed, first entry related to purchase and second entry related to sale with GST. Now next, on 18th March, legal fees paid 5,000, and on legal fees we paid 9% GST, 9% CGST, SGST. So here input debit, input CGST account debit, input SGST account debit with amount 450, and this amount will be calculated from legal fees amount 5,000 multiplied 9%, that is equal to 450. After adding all these value, that is total 5,900, and it will be transferred to bank, that means legal fees, CGST, SGST, all these amount will be paid by check. Now next, entry of purchase of furniture for shop from ABC Furniture Shop on credit scheme. So that's why furniture account debit, input CGST account debit, inputs SGST account debit to ABC Furniture account credit, because this person's from a businessman takes purchase the furniture on credit, and when businessman purchase that furniture from the ABC Furniture Shop, that's price that is 12,000. After CGST or SGST, that will be come 15,360, and 12%, 12,000 multiply how much amount of discount, that is 14%. So here we calculate 12,000 14%, that is equal to 1680. So after calculating all amount, we will find out how much amount to be paid to ABC Furniture Shop account, that is 15,060. This is the total CGST. We will add all input CGST, we will get 4,630. All input SGST, that is 4,630. All output, all CGST, all output SGST, and therefore net CGST payable 7,500 minus 4,630, that is SGST and CGST both are equal because percentage of calculation also equal. Now how to pass journal entry? Only CGST or SGST in a journal book. On 19th April 24, output CGST account debit 7,500, output SGST account debit 7,500, to input CGST 4,630, to input SGST account 4,630, and to electronic cash ledger account 5,740. How to calculate this? Add all these values and subtract this value, you will get this value. And the payment of GST liability by utilizing ITC for CGST and SGST for the tax period. Thus, due to input tax credit, tax liability of 15,000 is reduced to only 5,740. GST on legal fees can be used to set off against GST which is payable on goods sold, and which was not possible in the erstwhile tax regime if there had been any input tax credit left. It would have been carried forward to the next year. Now I will discuss how to calculate CGST and SGST in case interstate. For example, Mr. X purchased goods 1,50,000 from outside the state on 1st March, and he sold 1,50,000 on 4th March locally, and then he again sold 1 lakh outside the state on 12th March. This will be in state and this will be out state. He paid telephone bill 5,000 on 14th March. He purchased air cooler for his office 12,000 rupees on 25th March locally. And here assume that CGST and SGST both are 2.5% on goods traded, whereas GST on telephone bill, that is 9%, CGST and SGST, and GST on air conditioner, that is 14%, CGST and SGST each. Now what will be entries? First, you have to pass entry of 1st March when he purchased, Mr. X purchased goods. Purchases account debit 1,50,000 and input CGST 2.5%. When we calculate this, 1,50,000 multiplied 2.5%, that will be equal to 7,500, and after adding both we will get amount of creditor, that is 1,57,500. Here you can say purchase of goods to be traded bearing GST of 5% on in total. Now next, next is on 4th March, debtors account debit to sales, to output CGST, to output SGST. 1,50,000 amount, 1,50,000. That is 75,000 or 500, and divide by equally, that is 3,750. Here it also 2.5% add. Now on 12th March again sold, debtors account debit to sales, to output CGST account. It will be calculate total GST, that is 5,000. What's the difference between? What is the difference? When it purchase from outside, when he purchase goods from outside, then total GST will be taken, means CGST plus SGST both will be added, and that will be calculated on purchase or sale. And here also outside, so that's why here also 5% will be taken combined. Now next, telephone expenses. Telephone expenses account 5,000, input CGST, input SGST, that will be equal to 450, 9%, and total amount will be paid by check to bank 5,900. And on 25th March, office equipment 12,000, CGST, SGST calculate 14%, and total amount 15,360, that is paid by check to bank. and total GST or SGST will be calculated here, and IGST also calculated. Now CGST, SGST and IGST. Output liability will be passed in. This is the balance sheet. Here we will pass entry. Output liability, that is 3,750. SGST output liability 3,750 and IGST 5,000. Less input tax credit. IGST 2,500. IGST 5,000. CGST 1,250. SGST 2,130. And amount will be payable, that is equal to 1,620. Now, any IGST credit will first be applied to set of IGST. If you have given any IGST credit, then you have to first of all set up the IGST, then CGST or SGST in any order. And so out of total input IGST rupees, that is 7,500, firstly it will be completely set off against the IGST. So set of entry will be this. Set off against CGST output. Output CGST, that is given 3,750. You can check from the previous journal entries. And to input CGST 1,250 and to input IGST, that is 2,500. Now set off of IGST output IGST given 5,000 and input also given 5,000. Now SGST setup, output SGST is given 3,750. Input is given 2,130 and electronic cash ledger given 1,620. Now final payment, electronic cash ledger 1,620 and to bank, that will be also 1,620. This is the payment of SGST for the tax period. Thank you.